you particularly want to avoid evil or seriously irrational people, particularly if they are attractive members of the opposite sex. That can
Charlie knows more about this.
The
expert. Yeah, it's better to hang out with people better than you. I found that very easy to do over the years. But if you're picking associates, pick out those whose behavior is somewhat better than yours, and you'll drift in that direction. And similarly, if you hang out with a bad bunch, you're very likely to find your own behavior worse over time. But like Charlie says, the trite advice, which Ben Franklin was handing out a few hundred years ago, really works. We've said it, but look at the people you like to associate with. What qualities do they have that you can't have if you want to? Look at the people that you can't stand to be around. What qualities do you have that they have? Can you get rid of them? You can do all of that at a young age. It gets harder as you go along. It's not very complicated.
And my final word of advice would be, if this gives you a little temporary unpopularity in your peer group, the hell with them. Well, all the trite stuff is what works. I mean, you avoid doing the really dumb things, like racing moving trains to the crossing, experimenting with cocaine, risking getting AIDS or other unfortunate ailments. There are just a lot of standard things that take people down, and you just give those a wide berth. And then you want to develop a good character and good mental habits, and you want to learn from your mistakes, every single one, as you go along. It's pretty obvious, isn't it?
Yeah, we would say, even though we issue lots of credit cards and everything, we'd say if I had one piece of advice to give to young people, that across the board, it would be just don't get in debt. The game plays a lot easier if you're a little bit ahead of the game than if you're behind the game. And Ben Franklin said that long ago in better terms, which Charlie can recite. But there's a real difference. I get letters every day from people that are in all kinds of financial trouble, and often it's health related, which is tragic. But very often it relates to debt. I mean, they get behind the game and they're never going to catch up. And often, it may surprise you, but often, I write these people. They're very decent people. They've just made mistakes, and I just tell them the best course is bankruptcy. I mean, they are not going to catch up, and they should start all over again, and they should never look at a credit card the rest of their life. But it would have been better if they'd gotten that advice a little earlier. But it's very tempting to spend more than you earn. I mean, it's very understandable, but it's not a good idea.
And of course,
Charlie and I sit around and think about what's the best thing to do with Berkshire's money. It's a fairly simple proposition, and we have a number of things that we feel competent to make judgments on, and we have a number of things that we're not competent to make judgments on. So we hope to narrow the field to investments that we think we can understand, and there are a reasonable number of those, although there are a lot that we can't understand. Anything I would say today, can change tomorrow. We don't think about the categories by themselves. Now, in a period like summer to mid-fall of 2002, when junk bonds became very attractive, we bought a lot of them. But we didn't make some great decision to buy junk bonds. We just started seeing things, individual items, that started screaming at us, buy, buy, buy. And then that came to an end. And so we don't go to the office in the morning thinking, what category, how do we prioritize our categories? We have an open mind, and whatever we see that day that overcomes or that crosses the threshold to where we take money out of short-term cash and move into it, it could be arbitrage. It's unlikely to be arbitrage now, because that's a game that to play on a scale that would have a meaningful effect at Berkshire is hard to do. I mean, they take very big deals, and it's something we've done successfully in the past. We've made a lot of money over the years in arbitrage and quite consistently at sometimes in the past. But Charlie and I do not have a checklist that we talk about every day or every month or every year in terms of prioritizing categories. We just hope, I hope he gets a good idea. He hopes I get a good idea. And when we get one, we move in a big way. Well, they have to be big now, and that's a limiting factor in terms of what's available for us. As you know, if you read the annual report, we took a significant position in currencies. We're buying viatical settlements in terms of the transaction I mentioned a little earlier. We're open to anything we can understand. Charlie?
Yeah, you really asked us to determine an order of precedency among 2 or 3 activities we don't have much interest in at the moment. And that's not something we spend a lot of time at. In other words, we have all this cash because we don't much like any of those fields at the moment. And spending all the time thinking about orders of precedency among things you clearly are not going to do is pretty fruitless for us.
Yeah, I thought I had a slide here, but I don't. But when we were buying junk bonds in the summer to fall of 2002, we were literally buying securities, and we limited it to the kind of junk bonds we can understand, which is far from the whole universe. But we were literally buying things on a 30, 35, 40% yield to maturity basis. Now, we buy those with a mental attitude of buying common stocks. Interestingly enough, within 12 months, some of those same securities that were yielding 30 or 35% went to prices where they yielded only 6%. I mean, that is truly remarkable when you think about that happening in a country that was not in the throes of depression or anything. I mean, prices do amazing things in securities markets, and when they do something that strikes us as amazing in our direction, we will act. But we do not know today what we're going to be doing tomorrow. We have some things, a few things we may be doing. It's likely we're doing them tomorrow, but we don't hold any committee meetings on this, and there's this business where somebody says you should have 50% of your money in bonds and 35% in equities and 15%. We don't go through anything like that. I mean, we regard that as nonsense. Any further thoughts, Charlie?